All right, if you really want to get your head around the business of oil and gas, you have to understand its value chain. We're talking about a global system of just incredible scale and complexity, and it's where literally trillions of dollars in capital get put to work. So today, we're going to do a strategic breakdown of how this whole thing actually functions. So think of this as a strategic flyover of the entire journey. We're not just going to list the steps, though. No, we're going to analyze the business model of each segment. The real goal here is to figure out, where does the capital go? Where's all the risk concentrated? And maybe most importantly, how is profit actually made?
Okay, so first stop, upstream. You can really think of this as the engine room of the entire industry. It's a high-stakes, high-reward game, and it's all focused on one thing: finding and securing that core asset. The actual hydrocarbon reserves that the whole business is built on.
And here we are right at the very beginning of that journey. For a big integrated energy company, basically every single dollar of future revenue and shareholder value, for that matter, it all hinges on the quality of the capital allocation decisions that are made right here at this stage. Now, modern exploration, it's really not about some wildcatter just striking it lucky anymore. It's much more like financial modeling, but on a geological scale. I mean, companies use this incredibly sophisticated technology not just to find the stuff, but to actually quantify the economic potential. It's all about de-risking what are often billion-dollar investment decisions way before a single drill bit ever touches the ground. So once a prospect gets the green light, the next phase is a huge capital outlay. We're talking about drilling and completion. This is where the lion's share of the upfront money gets spent. And that engineering precision you hear about, it's not just some technical goal. It is a direct driver of the project's return on investment. Get it wrong, and you're in trouble.
And, production isn't as simple as just turning on a spigot. Not at all. A better way to think about a producing field is as a long-term financial asset. It's something that has to be actively managed, sometimes for decades, all to optimize cash flow, keep costs in check, and, of course, maximize how much of that resource you can ultimately recover.
What's really fascinating here is how technology can just completely turn a business model on its head. And hydraulic fracturing, or fracking, is the perfect example. I mean, it wasn't just some new technique. It was a total market-shattering innovation. It unlocked these vast reserves that were previously thought to be uneconomical, and in doing so, it fundamentally changed the global cost curve for energy. A real game changer. Okay, let's move on to the next major stage. So you've done the hard part. You've unlocked the resource. Now what? How do you get it to market and actually make money from it? Well, that is the absolutely critical job of the midstream sector, what I like to call the industry's logistics backbone. If we look at our value chain map again, you can see midstream is that vital connector right in the middle. Now, from a business perspective, this is really interesting. This sector is often way less exposed to those wild commodity price swings. Why? Because its revenue model is a lot like a toll road. It's all about generating stable, fee-based income from long-term contracts. Much more predictable. So what does this journey actually look like? Well, you can think of it as a logistics chain. First, you've got to gather the product from maybe hundreds of different wells. Then you process it to make sure it meets all the pipeline specifications. After that, you're transporting it, sometimes for hundreds or even thousands of miles. And finally, you store it to help balance out supply and demand. Every single one of those steps is a critical link. And wow, this image really drives home the sheer scale we're talking about. I mean, look at that. These are billion-dollar, multi-decade assets. Think massive pipelines and enormous LNG carriers. So if you're an executive in this part of the business, your strategic imperatives are crystal clear. Maximize the use of these assets and lock in that long-term, reliable cash flow. And finally, we get to the part of the business that actually faces the customer. We're talking downstream. This is where that raw commodity, that barrel of crude oil, gets transformed into the thousands of high-value finished products that, well, pretty much power our modern lives. Looking back at our diagram, you can see downstream is that final link connecting everything to the end user. Now, here's the key to making money in this segment. It's not really about the price of oil itself. No, it's all about the margin. They call it the crack spread, which is basically the difference between what you pay for the crude oil and what you can sell the refined products for, like gasoline or jet fuel. At its heart, it's a manufacturing and marketing game. So, how do they capture that final bit of value? Well, it comes down to a few things: achieving operational excellence in their refineries, creating all sorts of specialized materials in petrochemical plants,
And, of course, building up brand value through really sophisticated marketing, distribution, and trading operations. But here's the thing. These three big segments, upstream, midstream, downstream, they don't exist in a vacuum, not even close. They're all enabled by this critical ecosystem of specialized services and stakeholders. You can think of it as the operating system that allows the entire value chain to actually function. And these support functions are absolutely mission critical. You have EPC firms that actually build the assets. You have O&M teams that make sure everything is reliable and running. You've got HSE, which manages all that non-technical risk and protects the company's license to operate. And then there's R&D, which is busy delivering the next wave of technological advantages. Now, this right here, this shows you that incredibly complex web of interdependencies. Just think about it. To get any major project off the ground, you have to navigate this entire landscape of contractors, regulators, and financial partners. So for any leader in this industry, managing these relationships isn't just a small part of the job, it's a core strategic function. Okay, so after that quick flyover, let's pull back up to that 30,000-foot view. What are the really essential takeaways here for anyone trying to understand this business from a strategic level? Look, here's the bottom line when you boil it all down. Upstream is your high-risk, high-reward value creation engine. Midstream is that capital-intensive logistics network, the one that often provides those steadier, infrastructure-like returns. And downstream, that's your margin-based manufacturing and customer business. The truth is, a winning strategy really demands excellence across all three. And all of this leads us to the one critical question that's facing every single leader in this industry today. You know, this value chain, it basically powered the last century. But as we navigate this massive energy transition, where, within this exact system, will value be preserved? Where might it be destroyed? And where will the next multi-billion-dollar opportunities actually emerge? That is the question.